With Ethereum breaking out versus the dollar, many are now turning their attention to the potential flippening this year. This is due to a number of events that could see parabolic price moves for ETH. So in this video, let's take a look at the bull case and the catalysts that are coming up. The first one is going to be the London hard fork on July 14th. This is where EIP1559, which I did a full video on down here, actually gets implemented. This is the improvement proposal that can potentially make Ethereum deflationary. After the London hard fork, we have the Shanghai hard fork towards the end of the year, and this is where the merge may take place. This would see the consensus method for Ethereum change from proof of work over to proof of stake, something that's been widely discussed in the Ethereum community right now, with many core team members trying to push this one through for Shanghai. So you may have heard of Bitcoin being called sound money with its fixed supply of 21 million coins, but now we're starting to hear people call Ethereum ultrasound money due to the fact it will have a decreasing supply once the merge and proof of stake are live. But note the asterisk down the bottom, that only applies if the fee burn is greater than the proof of stake issuance. So Ethereum hitting an all-time high again today, $2,700. It went as high as 2,797 a bit earlier against BTC, now over 0.051 BTC per Ethereum. The market cap $315 billion. For this to now do a flippening, it pretty much has to do a 3x from here. Flippening just means becoming the number one crypto by market cap and thus overtaking Bitcoin. And congratulations to anyone who has invested in Ethereum over the past 12 months. You are all in profit, and this price chart looks rather spectacular. So one of the biggest ETH bulls on Twitter, the DC Investor, it's tremendous feeling to watch the space and increasingly the rest of the world wake up to the fundamental value of ETH and Ethereum. This is no flash in the pan. This is a seminal shift. If you haven't been paying attention, you still have time, but not much. And we're now starting to see TradFi really enter the game with Ethereum, using it for many different things. And it does pose a question, how long before we start to see corporations adding Ethereum to their balance sheets? JP Morgan are now even jumping on the ETH bandwagon. They say that BTC is more of a crypto commodity than a currency and competes with gold as a store of value, whereas ETH is the backbone of the crypto native economy. To the extent owning a share of this potential activity is more valuable, ETH should outperform BTC over the long run. And just 2 days ago, we saw this, the European Investment Bank now issuing 2-year digital bonds on the Ethereum network. Note they have not chosen any other blockchain but Ethereum. The notes will be registered in the public Ethereum blockchain network using distributed ledger technology. That even got a wow out of Raoul Pal. So when we look ahead to the London and Shanghai upgrades with EIP1559 and also the move to proof of stake, we have some nice numbers to have a little look over. Thanks to Justin Drake. This guy is an Ethereum 2.0 researcher. I've listened to a few of his podcasts on Bankless. Really worth a listen. I will leave the document that we go over in today's video right here in the description so you can have a look yourself. Within this, Justin does make some assumptions, clearly as we do not have all this data in front of us yet, as it is hypothetical, but we can get a good feel of where we're going to be due to the on-chain metrics available. So at current, under proof of work, the daily issuance is around 13,500 Ethereum. You can check out the block rewards on Etherscan yourself. And then the move towards proof of stake, with that merge, we'll see the issuance drop to 2.1 thousand Ethereum per day. So this merge is going to be good for the emissions being reduced quite drastically here. Imagine going from a fire hose down to a garden hose, if you will. And the daily transaction fees on Ethereum right now are averaging around 10,000 ETH per day, which is rather spectacular. And if we look at this graph, you can see the only way is up here. The 10K level is this line here, but many of these transactions over the past month have been towards the 15,000 ETH per day. We even saw up to 42,700 ETH as transaction fees back in September. So with growing fees means that when EIP 1559 goes live and the base fee for transaction no longer goes to miners, but instead gets burned, we're going to see some real deflationary pressure. The assumption here is that 70% of the network fees on Ethereum will go to that base fee and be burnt. So if you imagine, we're already decreasing the amount of new issuance rather substantially, going from the fire hose to the garden hose, and then evaporating 70% of those emissions straight out the gate. Under proof of work, many of those miners out there are generally just businesses, and they're individuals who have to actually go ahead and sell their ETH on the market. Proof of work is more of a seller's economy. You have a lot of this ETH hitting the open market due to the fact that these miners have to sell off. This is because they have to pay for electricity, hardware, income tax, that kind of thing. So on this assumption, Justin puts forward that 95% of revenue via proof of work is actually sold. That is a lot of inventory hitting the open market. But a move to proof of stake is a change in not just the consensus method, but the type of individual who's actually participating. So moving from more of a business to an investor standpoint. People like me and you will be staking ETH, but many of us are not mining it. Under proof of stake, there are less costs, and this assumption puts forth that 50% of proof of stake revenue will actually be sold. This is due to the tax implications. But as you can see, a lot less Ethereum will be sold under proof of stake rather than proof of work. We're moving from a seller's market to a buy and hold mentality, as the more that you can stake, the more that you can earn. This is a major behavioral change. So the current daily sell pressure right now is around 22.3 thousand Ethereum per day. This is over $7 million worth of inventory hitting the open market. But as we move towards the merge plus EIP1559 combination, so towards the end of the year, if the deadlines hold, then we would see the sell pressure drop substantially to just 2.6 thousand ETH per day. This is around $700,000. This gives a net daily reduction of over 19.8 thousand ETH. Over 1 year, this means 7.2 million Ethereum no longer hitting the open market. And the figures down here go to show that this is currently 7.2 million, around the amount of the combined Ethereum on the ETH 2.0 deposit contract and the Grayscale holdings. So less issuance, more burn, less inventory to go round. This leads you to believe just one thing: the price of Ethereum is bound to go up. So on this Twitter thread, we had Squish actually chime in here. Post-merge, Ethereum sell pressure will drop 90%. For Bitcoin sell pressure to reduce this much, it takes 3 halving events. I'll repeat, ETH will undergo the equivalent of 3 halving events in the next 12 months. This is a very, very bullish catalyst for Ethereum. So maybe we really can dream. Let's have a little look at the chart here. So the first level of resistance that we've already broken through is this around 0.04 ETH per BTC. This was a level of resistance going back to January of 2019. There's been numerous attempts and failures at this level, but we did break it in late January. We did not manage to get the support resistance flip and came down once again. Remember, 2 weeks ago, everyone was very bearish on ETH, and now we have absolutely broken through that level and smashed right through it like a paper bag. We're now pushing up towards the next major resistance at around 0.055 BTC per Ethereum, a level that has not been tested since August of 2018. So this is going to be a very interesting battle, but with the bullish catalyst we've just looked at, maybe this again will get the paper bag treatment, and then we are into open skies towards the third resistance. From current price, we need to go up around 5% to hit 0.055 BTC per ETH, and to get up to this next resistance point at around 0.08, it would take around a 55% increase in price comparative to Bitcoin. These are going to be key areas to watch, as you may see many people actually convert their ETH into Bitcoin. But if we can break through the third resistance, then we are pretty much in open skies all the way up to the previous all-time high. This is currently around 190% away from us right now, and I really think that if we did go up to this kind of level, it's time to get our Ethereum tattoos and have a party. But on a serious note, with ETH going deflationary and there's no real sign in transaction fees slowing down. I can only imagine it's going to be deflationary once the EIP 1559 is live, plus the merge. I don't think EIP 1559 is enough to get us up to this level alone, but with the merge in play as well, and the move to proof of stake, with many individuals locking up their ETH into staking contracts, and this being a really easy sell for many institutions, you're possibly going to get double-digit returns on your Ethereum in these staking contracts. It's going to become a very hard asset. The FOMO will be real. So this level is certainly not an impossibility, but this ultimately could be somewhere we go and venture towards. I'm not holding my breath personally, but I'm going to enjoy the ride along the way. So things are certainly looking very bullish for Ethereum, but it has broken our hearts many times before, as it looks like it's going to break out and then it does pull back. But it does feel like this time is different, as we have really just smashed through a previous resistance and the stars seem to be aligning for ETH on a fundamental basis and technical. If you enjoyed the content in today's video, make sure you subscribe to the channel. Drop me your Ethereum price predictions down below. I'd love to hear what you guys are thinking, and I'll see you in the next one. Goodbye.